Hello, my name is Raitis and welcome back to a new weekly outlook. I hope guys you are doing all well, and in today's video we're going to break down the market and what we can anticipate going into the next week. I hope you had a wonderful and restful weekend so we can start off into the market fresh and with a clear mind. As usual, we always start with the dollar index. For our weekly outlook, you can see right here that we sold off massively since the start of the month of March for the last 10 days. And yeah, you can see my monthly PD arrays. That's how I usually start with. I outline the key monthly PD arrays on my chart, and I have all the bullish fair value gaps right here, the BISIs, and also some premium levels from up here. But currently, that's my these are my monthly levels. Going into the weekly chart, you can see we sold off from the inversion fair value gap. We traded below this level and inverted this level to then sell off. You can see how we massively trade through all the discount PD arrays on the daily chart. You can see we trade through them, reclaim, sell off, trade through them, reclaim, sell off, and now we're at the daily fair value gap, which was our target objective from last week. Now, my weekly key PD arrays are I have some combined with the monthly levels. If a PD array is in close proximity, then I will write them in a cluster. And yeah, that's my approach. You can see we have this bullish fair value gap right here. We have the breaker low and open on the weekly chart, but I am skeptical if the market will retrace that far to then sell off again. So acting weird because they're in the hard time frames. But yeah, if we look onto the daily, my key concern for DXY is we closed below the daily fair value gap last Friday. Now I want to see if the market can reclaim this, or better said, invert this daily PDL level to then sell off, because we have reached a hard time frame objective. We are overextended on the daily time frame, and on the weekly time frame we had a massively overextended weekly candle closure. On the daily we have 1, 2, 3 overextended candles. You can see that's why Thursday and Friday consolidated, and we have reached a long-term objective, which was the daily fair value gap. Now, market could do literally anything at this point, ladies and gentlemen. It could consolidate, it could retrace, it could continue lower, or whatever. So all four market profiles are possible from here. That's why we have to sit our ass down and look what the market provides us on information. Now, T-note futures. That's always the next thing I look at. You can see the 10-year T-note futures also traded into a major buy-side liquidity pool, which is also from this daily candle. It's a near-term target objective to long-term target objective. Okay, ladies and gentlemen, so that's why we can expect it's reasonable for us to see a distribution. As we reach the key hard time frame level, it's reasonable to see or expect a retracement in the market. We traded back into the weekly fair value gap right here, and I'm looking for the market to resume its bullishness on T-bonds. 30-year T-bone futures haven't taken out their buy-side liquidity pool. I don't really view this as a divergence. The market also made a higher high on the daily. You can see 5-year T-note futures and 2-year T-note futures all made a higher high, and of course the strength is on the 2-year T-note futures. This is the leadership asset, and I think we can really get above this consolidation long term. Yeah, but for that, T-note futures, I think this was just a distribution due to the matter of fact that we traded above a buy-side liquidity pool. Again, at these times, literally any market profile can play out. It could consolidate, reverse, retrace, or continue in direction of higher time frame order flow, which is bullish at this point. That's why I'm still bullish on T-note futures. I am bearish on DXY, but DXY again has reached a major key high time frame level. Now we want to see if we can trade up into the daily fair value gap and invert this level to trade lower, or if we see a different market profile. But that's my invalidation and confirmation criteria for DXY. Euro USD, of course, saw a massive rally, and you can see we're also distributing quite a little bit. You can see where the rejections from this bearish daily order block inside a premium level. The monthly levels are outlined right here. I won't go in every detail into one of them. We have on the weekly time frame. This is a mitigation block. The question is, can we reclaim this bearish order block and turn it into bullish mitigation block and then trade higher? This is the question we are or this is the thesis for this week, and we're trying to validate that. Of course, we are overextended. Don't expect a lot of volatility going into this week. Yeah, GBP USD also fundamentally, of course. But wait, let's see what's your. Yeah, Euro GBP was extremely bullish last week. Again, I'm viewing this whole thing as a manipulation, and we're deferring liquidity before we trade into our major target objectives. We traded into the weekly order block, mean threshold. We traded above this daily high where most of the open float liquidity would reside. You can see the rejections of the daily candles, and that's really telling me that we want to probably sell off on Euro GBP. At least this is my thesis. I view this run up as a manipulation and not a kind of break in structure. We have, I won't go over all the currency futures or CFDs, doesn't matter. I won't go over all of the currency charts, but just know I am kind of sitting at the sidelines with DXY. Now, currently, we're seeing some disparity. T-bonds are rallying. DXY is rallying heavily. I don't know. This is probably just non-session volatility, and that's why ES is dropping as well. NNQ and YM and all of the other asset gold. Gold is dropping heavily. That's in sync. There's no real market symmetry. If DXY is bullish, gold should see weakness. Now, what do we have next? We have the futures. Yes, you can see that the market has sold off massively. Now, I have the annotations right here. Maybe let's just use the minis. So on MES, you can see basically the same chart. On the weekly time frame, you can see we traded below the sell side liquidity pool, which is also a long-term. Let me see. Yeah, so this is a long-term objective, which we have reached, and we're trading inside this weekly order block. We reach into the mean threshold of this weekly bullish order block. Now, let's see if we can get some displacement higher from this level, because the problem is, and this is what I found out on my weekly outlook as I was going through the charts, you can see usually we have a positive correlation between T-note futures and the equities market. But as you can see, as we were rallying lower, the Tino futures treasuries market was rallying higher, which is a decoupled, which are decoupled markets, and I think this whole run lower on the equities below the sell side liquidity pool was just a manipulation to trade back into the range, because I believe we're still inside a consolidation profile. You can see basically on the equities, this is just a massive consolidation right here, which we're seeing. We're trading above the highs, rejecting lower, we trade below the lows, rejecting higher. So I think this is a manipulation on retail. Retail is trapped short, and I think we could really get a run back at least into the equilibrium of the range, because again, we're just seeing this decoupling of the market and just acting based on this information. And let's see what the market can offer to us this week. And I really anticipate for the equities this forming a swing low into the marketplace, because we're at a key higher time frame level. We have the disparity between T-note futures. I mean, for that, of course, DXY shouldn't be bullish. We should see a bearish dollar if we want to see rising equity futures. And with that said, let's see how the market plays out this week. And I already posted on Discord, I posted this trade. We're currently in this trade. I really don't trade London session, but because of the fact that I'm anticipating a swing low forming on the daily time frame, and that this is only a run lower just for us to take out sell side to then run back into the range. We are in a 1 hour fair value gap right here. We are again on DXY. We are also in this weekly bullish order block right here. I don't have to draw this out for you. And on the daily, we have this fair value gap right here. So we're at a key high time frame level. That's basically what I want to say. And 4 hour. Now the only thing which I dislike is that we have traded and market open below this low. I really don't like this, because if we really anticipate that this run lower has retail traders trapped short, you can see we had a massive reversal and run against buy side liquidity. I didn't really want to see market trade back down to this level so retail can close their trades break even. That's why this is the only key point that I'm concerned about. But you can see market is really volatile. DXY is bullish, which we don't want to see if we want to see rising equity futures. But yeah, that's the conclusion. So we have to wait for more market information. And with that said, let's go into the weekly economic calendar. Again, we have the daylight savings times shift. We have some high impact news release for London close on Tuesday. Again, we have no high impact news or medium impact news release today on Monday, but we can still trade if we anticipate a swing low forming direction of higher time frame order flow. We have CPI, and this is the main news release for this week. Last week we had NFP, so CPI will follow this week on Wednesday, and this will be the main event everyone will be waiting for. And by that time, we should see the displacement on DXY and the treasuries market to confirm our buys. And Thursday, also a 30 news release, core PPI, and unemployment claims. And then on Friday, another high impact news release for the London close session with the consumer sentiment and inflation expectations. So, ladies and gentlemen, I think we got even stopped out in the trade already. I will check on later. But yeah, this was the weekly outlook. This is the analysis. We have to see if DXY can run lower after this run on buy side liquidity to with the idea of inverting this daily fair value gap. So trade safe, guys. I wish you all a pleasant week and trade safe. Really try to focus in on your risk management this week. This will be my key topic and concern for this week, really dialing on the risk management. And with that said, ladies and gentlemen, stay safe, trade safe, have an awesome day, and we will talk with each other in the evening commentary today. Bye bye.